Welcome to Palantir's Investor Day. We're very happy and proud to have you here. Many of you know us for our work in the intel and defense space. Some of you know us for powering some of the largest institutions in the world in the commercial sector. And what's interesting about what we're showing you today is that you're going to get to take a look at our financial history. And one of the things that I think people have already noticed is that the revenue has grown dramatically, that the quality of the revenue is, in my view, astonishing. And then in the combination of quality of revenue and growth, it's a very unique company. Then the question is, well, how did you get this revenue growth off of a large scale late into the history of a tech company? And how did this happen? Well, this happens because our business is just different than what you'll find in most software businesses. Most software companies build software based on what were the past needs of a client and reduce those needs to a tiny, understandable wrench that you can buy and put into your Frankenstein monster of an enterprise. Palantir discovered in the intel and defense space that the single most efficient way to supply software would be to supply the whole stack. That the end user, to get the true alpha of the enterprise, needs a stack that works on day one, or in our case, in hour two. Palantir, Foundry, PG, and the other products we supply to the classified space work on day one and give you the power of a complete stack that otherwise you would have to build over many months, if not years, and quite frankly, mostly doesn't work. But what's interesting about Palantir, and particularly unique, what I would say is an N of one, is that Palantir builds stacks 5 to 10 years before the general public realizes that this way of looking at the world will literally save your institution and in many cases save your life. And the magic of Palantir was building PG and Foundry 5 years before anyone believed that they were things that were necessary for our survival, either commercially or in the context of data protection, our way of life, or on the anti-terror battlefield. And what makes this magic special is that we've done it not just once, but many times, and that we will do it again in the future. So on this day, I'd like to welcome new Palantirians in the form of new investors, ask you to look at what we're saying, be aware of the fact that we're going to keep our culture and we've not wavered for that, and thank the Palantirians who, in my view, are the most important investors we have. And thank you very much.
Hey everybody, welcome to our Investor Day. Big day for us. We're going to share a lot about our company. We're going to share some of our secrets, and we're really excited to do so. My name's Kevin Kawasaki. I'm the head of business development at Palantir. I'm joined by our Chief Operating Officer, Shyam Sankar, and our Chief Financial Officer, Dave Glazer. I'm going to start by sharing a little bit about the general profile of our business, particularly from a financial perspective. And I'll start with revenue. We did $743 million in revenue last year. But I'd like to go back to 2017, when we did just over $500 million in revenue and only grew at a rate of 11%. Nothing exceptional about that. What is exceptional is that we've accelerated the growth in revenue every year since. In 2020, we've grown 49% through the first half of the year. And we've also grown our gross margins to 78%. So we're growing 49% on an extremely large base with 78% gross margins. We don't see anyone else doing this. So how are we doing this? Well, that's what we're going to share with you today. And to kick us off, I'm going to introduce our Chief Operating Officer, Shyam Sankar.
Thank you, Kevin. As Kevin mentioned, I'm Shyam Sankar, the Chief Operating Officer of Palantir. I've had the great privilege of helping build this company over the last 15 years when I joined as the 13th employee. And I'm really excited to share with you how we're thinking about the business. But first, you heard from Kevin about our strong growth. How are we doing that? How did we do that? Well, we sell two platforms, Gotham and Foundry, and they are vertically integrated end-to-end platforms that are designed to be the central operating system of a modern enterprise. We have invested for years in building two truly unique platforms that are focused exclusively on helping our customers win. And that's because they're focused exclusively on alpha generation. In the government context, it's pretty hard to get more alpha than how do you win the literal war. And in the commercial context as well, it's not just how do I beat my competitor, but how do I secure my place as the entire value chain that I exist in is being disrupted all around me. And we help our customers generate this alpha because our platforms embrace the fundamental complexity of our customers' operations rather than forcing them into incorrect and preconceived notions. As a result, our platforms, they become integral to our customers' operations. What does that mean in the real world? It means that at Chrysler plants in North America, you will find Foundry open on the stations of the assembly line used to manage quality in real time. That at BP, oil production flows through Foundry. And that at US Special Operations Command, missions are planned and executed in Gotham. Our software has become the place customers make decisions and where they go to continuously learn how to make better decisions. You can't do that with analytics or a data platform. It's not enough. It's grossly insufficient. You're not going to win a war with the data platform. You can't discover new drugs with analytics. You need a central operating system. So how do we accomplish this ambition of being the central operating system for the modern enterprise? Well, we install our platforms. And install is a very important word here. All enterprise software requires installation, and there are different philosophies around this. On one extreme, you have the legacy approach of ERP, where for perhaps every dollar in ERP license sales, there might be $9 in professional services. We're on the other end of this. We have chosen to internalize the cost of installation. So we sell our software with a subscription fee, but the installation is a cost that we bear. And we do this for two reasons. The first is that this creates a ruthless economic incentive for us to continuously decrease the overall installation time by applying R&D against it. And we're pretty good at that. Over the last year alone, the average customer onboarding has fallen by a factor of 5. We can now onboard customers in less than 2 hours. We continue to see significant reductions in the intensity of these deployments from software-defined data integration investments that we're making. And that's great. But the second reason that we internalize the cost of installation is much more strategic, and it has to do with the nature of our software. We think of our platforms as internal software aggregators in the Ben Thompson sense of the word aggregator. We are aggregating the supply of all the data in the enterprise. We have the greatest source of truth, well-modeled, ontologized, with security built in. And we are aggregating the demand in the form of all the users who make operational decisions. And so to accomplish this, we have to onboard a critical mass of the enterprise onto the operating system. And once you are at that critical mass, the software does the work from there. In effect, you can walk away and stop investing in installation while remaining completely confident that the software will provide ever-increasing value. Hitting that threshold means that our software is the most logical place for the enterprise to implement the next marginal application because they have already amassed all the data, and this is where their users live and make operational decisions all day long. I want to share one of our secrets here, one of our core pieces of technology. Both Gotham and Foundry, they stand on the shoulders of a silent third platform, Apollo. Apollo is our continuous delivery and production infrastructure. And Apollo is really important because it enables us to have SaaS-like economics regardless of our deployment target. And so while most new customers for us are in the public cloud, we have very important and strategic customers across very heterogeneous deployment targets. Public cloud, private cloud, on-prem, in a Humvee, on a submarine, on a drone. Apollo allows us to service all of this footprint economically, delivering modern software experience. But even more importantly, it's a strategic moat for the company. We can meet the customers where they are today and win business rather than focusing on convincing them to deploy in a multi-tenant public cloud as the only option. These platforms, they're game changers for our customers. But we never could have gotten here if we didn't walk, forget about 1 mile, many, many miles in our customers' shoes. So let's look a little bit at that journey. As you know, we founded the company in 2003, really with a singular ambition focused on national security that I'd kind of summarize as, why can't we have more privacy and more security? When I joined in 2006, we were certainly still under the delusion that we'd be, sitting in Palo Alto and eating our strawberries and shipping our code off to DC. But for that customer set, that just clearly was not going to work. They lived on air-gapped networks. They didn't send unclassified emails. The very usage logs of the software themselves were classified. You had to go there and spend all of your time embedded with them to truly understand the problems, and specifically understand the problems that were ubiquitous enough that you'd be able to build software around. So it took us a long time to build and release our first project. It was 5 years. In 2008, we released Gotham. And then quickly on the back of that, we expanded into the adjacencies beyond intelligence, defense, law enforcement, the prosecutorial space, regulation and oversight. The CDC, for example, has been a customer for over a decade. In 2012, we started more aggressively pursuing opportunities in the commercial space. And there's part of that journey that went really well. Gotham has very strong product market fit for anti-money laundering or anti-fraud. And there's another part of it that was an unmitigated disaster, really. It has not that much product fit for revenue generating use cases like cross-sell or upsell. And so in that period from 2012 to 2015, we were plugging the gap. We were doing lots of custom software development, lots of exploration and experimentation. And as a result, there are parts of the commercial segment at that time that started to take on characteristics that resembled a services company. But what we were really doing is that we were earning the right to have an opinion, specifically an opinion of what software ought to exist to solve our customers' problems, what software we would want ourselves in their shoes. And by 2014, we had that opinion, and we started investing extensively in the R&D around that. In 2016, we released that product. It became Foundry. 2017, with the benefit of hindsight, is probably the most successful and important year in the history of the company. So on its face, as Kevin mentioned, it actually looks bombastically bad. Revenue only grew 11%. But that belies the accomplishment in that year, which was that we were able to migrate our customers who were on these custom applications over to Foundry, over to this rock solid platform baseline upon which we've been able to accelerate revenue growth every year since. And in 2018, 2019, we really doubled down investing in R&D that enabled customer independence, allowing our customers to get ever increasing value from the products without us. And you'll see that in some of the case studies that we walk through. It's a banality to say that customers seek differentiation. Customers want to be more different, not more similar than one another. And I think this is actually one of the great paradoxes of commoditized packaged software, that by definition, it makes you more similar, not more different. And as a result, these sorts of solutions can only give you beta. It can't be a source of differentiation or alpha generation. On the other hand, we are exclusively focused on alpha generation. So traditionally, if you were seeking alpha, what do? Usually, you build your own custom software solution. It's a bespoke development project. And to the extent that that's what you're going to do, you're then going to do three things. You're going to hire consultants and system integrators. You're going to spend probably hundreds of millions to low billions on internal IT. And you're going to buy a bunch of different packaged software. And then you're going to stitch these three things together with a lot of promises, not the least of which is it's not going to be fast. No one even pretends to do something like this in less than 3 years. And that's our competition. We compete against our customers, more specifically against our customers' desire to build their own solution internally. And what we can do in 3 days to 3 weeks, they promise to do in 3 years, but that's not sufficient. It's not a sufficiently compelling proposition. Historically, periods of macro instability or crisis have been a huge tailwind for us. The global financial crisis, ISIS attacks in Europe in 2015 and 2016, present day COVID, and it's a tailwind for us because it means that the competitive alternative of building your own solution in 3 years or more is just not viable. It's just not feasible. So let's take a step back and kind of think about how do we see the problem? What do we see our customers facing? Our customers have had various challenges that they've needed to solve over time. In order to solve these challenges, they've deployed point solutions or custom applications or these non-canonical data lakes. And by and large, they've more or less succeeded in solving the tactical issue that they started out to solve. But they've actually dug themselves a deeper strategic hole with each one of these. Each one of these point solutions or custom applications has fed the heterogeneity of the enterprise. It has added to the entropy. It has made it less and less likely that the institution is able to wield all that is knowable within its four walls to win in the marketplace. And that's the problem that we solve. So let's look at two examples. We're looking at two European banks, kind of apples for apples. The primary difference is one of them, we're looking at a use case that started in 2016 and the ramp from there. 2016, of course, being the same year that Foundry was released. And the other one started working with us just about 2 years ago. We can see how much faster they attained value and customer independence from that. So in the first bank's case, we started working on one use case in compliance in 2016. And you can think about how much work we, Palantir, had to do and how much work the customer had to do at that point in time. So Foundry was just released and it was quite nascent. And so we really had to do quite a bit of the work. We had to do the data engineering, we had to do the application development, and the bank was primarily responsible for rolling out the application. 2017, we expanded to an additional set of use cases. We were able to get massive reuse from the data asset that we'd built the prior year, but new applications still needed our involvement to go build them. 2018, on the back of the R&D investments I alluded to earlier on customer independence, the bank's IT department took over Foundry. And that meant that they started doing all of the data engineering, all of the data science, and all of the application development. And over the next few years, you can see that the number of use cases just totally skyrocketed, given how independent they were able to use the platform and derive value from it. So in 2020 now, they have over 70 use cases that they're doing completely independently. And over that same period of time, the license fee has scaled from roughly $3 million a year to over $20 million a year. So the bank got there in the end, but it was a multi-year journey. If we look at the second European bank, we started working with them in the middle of 2018. And we started, even in the context of the pilot to win the business, thinking about customer independence and how we were going to enable them in the platform. And so now, very soon after we got the contract, the bank was able to get up to over 200 power users. These are the people who are doing the data engineering and data science and the application development. And they're building applications for over 7,000 weekly users in the bank branches, the relationship managers and the loan officers who are using Foundry to drive cross-sell and upsell and originate new financial products for both prospective and current bank customers. And the bank's over 60 use cases now in roughly half the time. And so incredible acceleration there. I've shown two European banks just to look at an apples to apples comparison, of course, of different vintages, but we're in 36 industries and we have a unique ability to draw on cross-industry insights as we do R&D. Often people look at this kind of industry spend and they think about verticalization. Are we getting leverage from the R&D we're doing and the things that we're learning about any given vertical? And that's definitely the case. You can deploy an AML use case, an anti-money laundering use case, in days now instead of the many months it would have taken in, say, 2016. But I think that undersells the real power here. The real power is the cross-industry leverage that we've been getting, how our digital twin capabilities improve oil production, but also drive how someone should do PPE allocation at a national level, or how the experiences optimizing F1 race cars drive the experiences of optimizing wind energy production. And this is what's increasingly powering the business. And so you see this in the depth that we're achieving within these verticals, but the acceleration and the application we have to new industries and new verticals as we approach them. With that, I'll turn it over to Kevin to talk us through and contextualize some of the numbers.
Thank you, Sean. I'm going to start by breaking down the revenue a little bit. Last year, we did 60% of our revenue outside of the United States. We do a lot of work with global multinationals and U.S. allied governments. Our two business segments are the commercial business and our government business. 53% of our revenue last year was from our commercial business. 47% of the revenue last year was from the government business. Now, we talked a lot about our growth in revenue from 2017, but where's that growth coming from? Well, last year, our government business grew 35%. This year, it's grown 76%. Our commercial business last year grew 17%. This year, it's accelerated to 27%. The revenue we're generating represents our installation base. The majority of our revenue comes from existing customers, recurring and growing. This year, over 95% of our revenue came from existing customers. How does that break down on a per customer basis? Well, our average customer does 5.6 million of revenue per year with us, and that's grown at a compounded rate of 30%. It's pretty large on average, particularly when compared to other SaaS companies, but oftentimes customers start small and they grow over time. Sham just gave some great examples of banks that started with just one use case, maybe in one department, but grew to over 60 use cases in over 10 departments. For that second example, it did so in just 18 months. We're also showing here some of our larger customers. Our large customers, they've been with us for a really long time, over 6.5 years on average. And you could see that this average rate, now at about $25 million a year, has grown over time as well. I'm going to touch base a little bit on margins. 80% gross margins in the second quarter of this year. Gross margins are important because they reflect the general strategy. We have two platforms, two binary sets of written code, and our business is to distribute these platforms to our customers. So how do we measure how well we're distributing our platforms? We look at contribution margin, key metric for us. Contribution margin is a way to think about the cost that we bear to generate revenue. And as you can see here, we're getting much more efficient. Our contribution margins have increased nearly 4 times since the first quarter of 2019. And at the limit, we think these margins should converge with gross margins as we continue to invest in things like Apollo, platforms generally, which help bring our costs down. Next, we're going to talk a little bit about the business model. Specifically, I'm going to talk about the life cycle of an account. We break this down into 3 phases: acquire, expand, and scale. In summary, what we're showing you is how we go from a loss leading category, acquire, grow through the expand phase, and go into a positive contribution margin phase that we call scale. So I'm going to break this down by category, starting with acquire. So a big investment here, $65 million in a category with essentially 0 revenue. These are new installations, the land phase of our relationship, accounts that we intend to grow. And if you look forward 6 months, we're doing some of that. We're generating just under 19 million of revenue, but still in the negative contribution margin category. So as we grow these accounts, we'll be looking to move them into the expand and scale phases. Next is the expand phase, which accounted for about 24% of our revenue in 2019. The objective here is that we should be growing revenue and finding the inflection point to positive contribution margin. And if you look 6 months forward, we're doing just that. These accounts have continued to grow, generating almost the same amount of revenue in 6 months as they did all last year. So strong growth and retention. And we've done this while hitting the inflection point to positive contribution margin, going from negative 43% to positive 35% in 6 months. If this continues on average, it looks like these accounts will advance to the scale phase. The scale phase is the majority of our revenue, about 76% of our revenue last year, and generating the bulk of the contribution margin. This is where we should be constantly getting better. And you're seeing this from 2019 to today. 55% contribution margin in 2019, 68% contribution margin in the first half of this year. But how high can this go? And to give you a little more color, I'm going to break this down into the top quartile of our scale group. The top quartile generated 87% contribution margin last year and 89% so far this year. So you could see what we're striving for, what is possible with accounts when we leverage the platforms and continue to invest our R&D dollars. What I've walked through is the life cycle of a customer account. It's not meant to be a timeline. Our objective is to make the acquire and expand phases as short as possible so we can grow the scale phase accounts. When we look at this as a whole, all customers should be scale phase over time. And so we're going to show two examples here, one in the commercial business, one in the government business. And to do that, I'll pass it back to Sean.
Thanks, Kevin. I really love, we'll start with the first example is a Fortune 20 customer here. And I love this example because it integrates some of the threads we've talked about already and introduces a few more that we should be talking about. So we acquired this customer through our direct sales force. And the direct sales force is a recent investment for us. We started building it at the end of 2018, and it produced pretty substantial results in 2019. It's about 3% of headcount right now in a place that we plan to continue investing in. We did a 1-week pilot with the business and a 2-week pilot with IT. So a pretty short acquisition sort of at-risk period for us. We were approaching the customer when competition was at its weakest. If you remember, our competition is our customer itself, specifically our customer's desire to build their own internal solution. And so we are approaching the customer at a point in time where they had spent several $1 billion over several years trying to build an internal solution that they decided wasn't going to work. After a several-month MSA negotiation process, I think classic for Fortune 20, we had a roughly $20 million first-year contract value, multi-year contract with escalators built in. And 7 months into the relationship, we're operating around a 67% contribution margin. So we are looking at a timeline here that has a massively compressed acquire and expand phase. And very likely at the end of this year, will be a scale phase customer. The second example is from the government segment. And unlike the prior example, this one had an excruciatingly long acquire phase. The relationship started with a 13-day pilot, and as often the case in government, these pilots actually just kind of prove the need for a more formal competitive procurement. And that formal competitive procurement took 2.5 years. We competed head-to-head against Microsoft and Accenture and a handful of other companies, and we won by a huge margin. And we won by a huge margin for all the reasons we've already discussed, a vertically integrated end-to-end platform that can deploy in hours and deliver value incredibly quickly. So this became a 4-year, roughly $450 million contract. The first year's contract value is $110 million. The 2.5 years of rather expensive sales and marketing to acquire the customer, that was paid back in less than 5 months. And within the first year of operating the contract, we're operating at an 87% contribution margin. So pretty successful. It shows you another way in which the customer lifecycle is changing. But I'd be remiss in not spending some time talking about one of the crucial underlying drivers of the government business right now, and that's 2377. I think of the commercial business as really being 4 years old, coinciding with the release of Foundry in 2016. But the government business, in my mind, is even younger. And it dates to late 2018 with the appellate court upholding the ruling on 2377. So 2377 is the commercial item preference. This is a law that's been on the books for over 25 years, since roughly 1994. And it states that to the extent there is a commercial item, i.e. a product, that meets the government's requirements, they must buy it. They are not allowed to go build their own custom developmental solution. And if you remember what we've been talking about in terms of who is our competition, well, it's the customer and their desire to build their own custom solution. You can see how powerful this ruling should be. So if we look at our Army revenue over time, you can see that there's a very clear inflection point between 2018 and 2019. And that coincides with the appellate court ruling. And for the first decade of our relationship with the Army, the revenue was flat. There's work in there that we are incredibly proud of. Work in Iraq and Afghanistan and helping soldiers. It's awesome. But we were consistently losing to the competition, which again is the Army itself and the desire to build their own solution. In 2016, the Army did a procurement, and the procurement excluded us from competing because it would only consider custom and developmental solutions. And so we sued and we won. The government appealed, and the appellate court upheld the lower court's ruling. It's worth mentioning that, between the appeal and the actual ruling, the Army had already started changing how they were thinking about acquisition and procurement to enable software and commercial items having the necessary sort of preference. And on the back of that, we've won multiple Army contracts. We've become a program of record for logistics in the Navy. We've expanded into the Air Force, Space Force, and Coast Guard. But really, this ruling applies to all U.S. government agencies, not just the DoD. And so it is massively TAM expanding because it takes a ton of budget that has historically been spent on services to build custom solutions and makes it addressable by software. And we have been investing in software in this category for over 15 years, and so are uniquely positioned to take advantage of that. So with that, I'm going to turn it over to Dave to walk us through the financials.
Thanks, Sean. I'm Dave Glazer, Palantir's Chief Financial Officer. Thank you for joining us on Investor Day. I'm excited to be here. I want to share some of our financial highlights with you as we think about our potential growth. As a company, from a financial perspective, we're focused on revenue, margins, and liquidity. As you've seen, we've experienced impressive growth in our top line and profitability. Our revenue in the first half of 2020 grew 49% from a top line perspective, and it was the first time we had an operating profit on a non-GAAP basis. What's most interesting is how our financial results evidence the efficiencies we've gained in our software and operations, all while maintaining a strong financial position. I'll start off by talking a little bit about our revenue. Our revenue for fiscal year 2019 was $743 million. This represented a 25% growth rate from fiscal year 2018. Revenue in the first half of 2020 further accelerated and was $481 million. This represented a 49% growth rate from the first half of 2019. While we've been focused on top-line growth, we're also seeing acceleration in our margins. Starting with gross margin. Our gross margins were 80% when excluding stock-based compensation. Not only are we seeing improvements in gross margin, we're also seeing them in contribution margin. Contribution margin is an indicator of our efficiency in delivering and selling our product. Contribution margin is defined as gross profit minus sales and marketing, excluding stock-based compensation, divided by revenue. In Q2 2020, our contribution margin was 55%. This represents an improvement from 18% in Q2 2019. Our Q2 operating margin, excluding stock-based compensation, was 11%. This was our first quarter with an adjusted operating profit. At this exciting juncture, with accelerating revenue and margin growth, we also have a very strong balance sheet. Our cash at the end of Q2 was $1.5 billion, and this doesn't include a $410 million strategic investment that closed in the first few weeks of Q3. So to briefly recap, we grew at 49% in the first half of this year versus the first half of last year in revenue. Our adjusted gross margin in Q2 was 80%, and we had a positive adjusted operating margin in Q2 for the first time. Now, let's drill down into revenue, margins, and liquidity in a bit more detail. As you can see, our revenue has been accelerating since 2017. Moreover, this acceleration has really continued into the first half of this year. When we look at the chart, we really want to highlight two things. And first is the development and launch of Foundry, starting in 2016 and continuing into 2017. And then also our lawsuit under 2377 of the US Code that Sean discussed. So when you think about it, we're a 17-year-old software company, but in many ways our products and our go-to-market strategy are still in their infancy. And now we just talked about our revenue history, like what's generating that revenue? That revenue comes from two software platforms, Foundry and Gotham. So while it's true in the past that we did custom development work and built bespoke applications, we aren't doing that today. We're exclusively deploying these two software platforms across all of our customers. Our contracts are generally fixed fee. Our customers pay us for the all-in cost to deliver, maintain, and service these platforms, and we continue to do this more and more efficiently as our products have matured and adoption across our customer base has increased. To measure this efficiency, we look to our margins. Let's now take a look at our gross margin, contribution margin, and finally, our operating margin. Gross margin and contribution margin measure how efficiently we are generating our revenue growth. Gross margin has increased as improvements in our cost of revenue have continued as we've made significant investments into our platforms, particularly our Apollo platform, which cuts the time it takes to onboard a customer from weeks to hours. From a financial perspective, Apollo reduces the need for headcount growth and cost of revenue. So look for us to continue putting R&D efforts towards increasing efficiency here. As gross margin has increased, contribution margin is also improving due to the improvements in our platform and the fact that we still have a relatively small sales force. While we've grown our sales force over the last couple of years, as both Shyam and Kevin mentioned, the growth has been measured and it's at a far slower pace than our revenue growth. Now let's talk about our operating margin. As I discussed, the efficiencies we've been focused on have resulted in Q2 2020 being our first positive adjusted operating income quarter. So far this year, our operating expenses have significantly decreased as a percentage of revenue, and we're really excited about this trend. While some decreases in our expense base in the first half of the year are the result of the COVID pandemic, all companies across the world have shuttered their offices or significantly reduced travel, we expect to continue leveraging these efficiencies into the future. We'll move on to our liquidity position. As we think about cash flow, it is important to understand how our contracting has changed over time. Prior to 2020, we pursued multi-year upfront payments for our contracts. This meant that often customers might pay us for a few years in advance. This resulted in significant growth in customer deposits and often our cash collections being far greater than revenue in any given year. As we've shifted all our customers onto our platforms, the need for upfront payments has been reduced. As the result of this shift, revenue recognition and cash collections from customers should tie more closely together in future periods. As a result, many customers have already paid for 2020 and prior years, and this helped explain the negative cash flow that we saw in the first half of this year. Our balance sheet is exceptionally strong and we have limited debt. As of June 30th, 2020, we had $1.5 billion in cash on the balance sheet. This includes a $300 million term loan, of which we've already paid off $100 million of since then. In addition, we have an undrawn revolver of $200 million, and this doesn't include the strategic investment of $410 million that closed in early Q3 that I referenced earlier. We are well positioned to take advantage of a host of opportunities for growth that lie ahead of us in these very uncertain times. We plan to do this all while undertaking a direct listing that provides liquidity to our employees and stockholders starting on the listing date. When we think about the future visibility of our business, there are a number of factors that provide strong visibility and stability for future revenue growth. The first thing to understand is that a significant portion of our business is in the government sector. The metric we use when looking into the future of government revenue is government deal value. At the end of 2019, we had $1.1 billion in deal value against $350 million in 2019 revenue, which is about 3x the coverage. This number, as of June 30th, was in excess of $1.2 billion and doesn't include over $2.5 billion in IDIQ awards we've been awarded, and really is a pretty conservative view. In addition, this doesn't take into account that most government contracting in the US revolves around the government year end, which is September 30th. So this is really a metric that we really should look at on an annual basis. Another area to look at when thinking about the stability of our revenue is our existing customer base. Our existing customer base is really our revenue base, and the expansion of existing customers is the main driver of our revenue base. So for example, last year, more than 90% of our revenue came from customers that generated revenue in the prior calendar year. When we think about expected future revenue, our existing customer contracts on average offer an additional 3.5 years of revenue using a dollar weighted average. And although the large majority of our contracts do include termination for convenience clauses, our customers tend to stay with us. If you look back at 2019, our top 20 customers have been with us on average for 6.6 years. And when we look across the customer base and how we recognize revenue, we recognize almost all revenue ratably, and that's another leading factor in toward our stability and predictability of our revenues. I'll now switch gears and talk about the price of our common stock as we look towards our direct listing. Here you see our secondary trading price since the start of 2020, and we'll take a closer look here at August and September. The volume weighted average price in August was $7.31, and in September was $9.17. In August, the highest price per share was $11.50, and in September was $11. When looking at our cap table, there are 2.184 billion shares outstanding on a fully diluted basis. This assumes the use of the treasury stock method for all outstanding options and warrants, and the use of our most recent FMV of $9.29 per share. One key difference between shares and options subject to the lockup will be freely tradable starting on the listing day. The remaining RSUs held almost exclusively by employees will be freely tradable, and we anticipate that approximately 70 million RSUs will be vested and delivered as of the first day of our listing. Next, I'll move on to how we size our market. We've calculated our total addressable market to be approximately 120 billion. It's spread roughly equally between our two business segments. In the commercial segment, we're calculating this based on 6,000 of the largest companies in the world, but we're excluding those that are based in China and Russia. There's significant space to grow here, as we're currently penetrating less than 3% of the Global 2000. On the government side, we see similar opportunity for expansion both in the US and abroad. And given the growing instability in the world today, our products will be needed more than ever. In closing, I'd like to walk you through our long-term targets. Note that these numbers are on an adjusted basis and are excluding stock-based compensation. While we're positioned strongly today, we are focused on our long-range target model. This will be gross margin in excess of 85%, contribution margin in excess of 70%, and operating margin in excess of 35%. With that, I'll hand it back to Sean.
Thanks, Dave. Well, it's the investment in our platforms and the underlying technologies that drive these numbers that Dave just shared with us. And so you're going to hear a lot more about the roadmaps from the people who are leading those charges. But I wanted to share a high-level overview for both Gotham and Foundry. On the Gotham side, we are investing in AI-enabled mission command. And that means that Gotham is going to be the substrate that the next war is fought on and that deterrence is delivered in. America and our allies, we've spent hundreds of billions of dollars in sensors. But, we struggle to make sense of things. And so we are investing in the sensor fusion to help the commander make sense of what's going on in the battle space and to automatically generate recommended courses of action. And then we're integrating upstream with the weapon systems and the assets so that with a single click, the commander's decision can be executed. And we are doing this from space to mud, land, maritime, air, space, cyber, all 5 warfighting domains. On the Foundry side, we're deepening our investments that help make Foundry the operating system for the modern enterprise. And I'll highlight 2 places that I'm particularly excited about. The first is in simulation, which is really about understanding the counterfactual. What would happen if I did this? Or, my supply chain just got disrupted. What can I do now? And we're making this sort of simulation capability native to the ontology and a reusable primitive across the platform. And I think this is really important because this sort of interrogation is the basis of learning. And outlearning others is an irreplaceable source of alpha generation. We're also investing in greater low-code, no-code capabilities so that the thousands of blue-collar workers who leverage Foundry every day to make operational decisions can also build their own applications. If you think about this in the context of the aggregator dynamics, this is a deeply strategic investment. Each application that is built is going to deepen the customer's relationship with us as they generate more and more value from our platforms on their own. There is so much more to say about Palantir, about our technology, our products, our practices, our people. It's, we're this kind of crazy, remarkably flat company that has subordinated hierarchy and structure to outcomes, and that mandate and the responsibility for those outcomes, they exist on the front lines. So we want to pull the curtain all the way back and show you, what are we doing? How are we doing it? But have you hear that from the actual people doing it themselves. Thank you.
I got my first demo of Palantir in 2008 after returning from a tour in Iraq and realized two things immediately. I wished I had had access to it while deployed, and I wanted to be a part of building it in the future. Over the past 12 years, I've had the fortune of working with dozens of customers across our government and commercial businesses, and still feel that same drive of purpose to build our products for our users around the world. When I saw that demo in 2008, I was immediately taken with the idea that everyone working on complex operations, like those in Iraq, could achieve their mission on one platform. They could leverage years of data and share knowledge between headquarters in the field, between agencies, between units. I knew our platform could support the unique operations of each user around the world and also connect the entire effort. But to do that, we had to deliver tactical results first. When I was deployed, I didn't care about data transformation. I cared about my tough book working. The petroleum engineers I work with today care most about the data they need for their job, pouring in from thousands of sensors, streaming in real time to their machines on the rig. This is where Palantir got it right. In every engagement since I've been here, we started with one specific problem at the unit, engineer, or store level, and built a data asset from there that breaks down silos and creates a connected company. Rather than prioritize the end user or the CIO, Palantir built for both. This approach to software worked on the ground in Iraq, and it's worked across the commercial sector. Oil and gas companies have myriad functions: reservoir development, shipping and trading, sales and marketing. But all of those efforts have to come together to deliver more energy, more safely, with reduced emissions. Car manufacturers care about design, manufacturing efficiency, quality monitoring. Those threads have to come together to build higher quality cars targeted at the right markets. Each business unit has a unique mandate, but none can operate independently. Our platforms bridge that gap. Each user sees a different screen that feels like it's built for their job and their unique decisions, but it's all powered by the same platforms: Foundry and Gotham. So as they make those decisions, they're also building a connected company across their organization. Instead of running simulations on a local machine, a petroleum engineer runs simulations on the group level data asset, on not just their own work, but the work of every other engineer in the group, leveraging the knowledge of everyone who's ever worked on that well, and building a model that anyone else can then build on further. Instead of existing for a moment in time before it's forgotten in maintenance schedules or commodity swings, that simulation is written back to a time series to evaluate model health over time, as well as a separate but connected workflow prioritizing potential maintenance work. Instead of handling this as a one-off ticket, the maintenance engineer views all historic similar work, as well as the entire materials management inventory. This is used to make the most cost-efficient plan, building into a report for the CFO's office, which then feeds an enterprise portfolio view looking at carbon pricing. This transmission across a connected company is automatic and continuous, leveraging decades of historic data, millions of points of real-time streaming data, and human expertise to inform decisions. It has resulted in more than $1 billion a year of value delivered. We see this potential and process repeated across all our customers in every domain. I left my old job because I thought I'd have more of an impact building software for 1,000 intelligence officers instead of doing my one job better. I am more convinced of that impact than ever before, as our world has expanded from defense and national security to safer cars, lower carbon energy, and whatever we tackle next. For the next few hours, you're going to hear from Palantirians from every part of our business around the world, talk about our software, our customers, and the impact we're proud to have. To start, I'll hand things over to Mark Elliott, who will walk you through the fundamentals of our technology.
The technology to drive this impact for our customers started with a basic question. What if we use software engineering concepts to solve real-world problems? The platforms we sell today answer that question. We deliver an institutional operating system that our customers use to make the best decisions and to track, evaluate, and respond to their outcomes. Data, logic, and learning accrue and become knowledge. We take software engineering concepts like versioning, branching, testing, delivery, and monitoring, and apply them not only to code, but also to an institution's operational knowledge. Their data, ontology, analysis, workflows, and operations. Sometimes we've interpreted these concepts literally. For instance, we built a versioning system that efficiently tracks data updates over time, enables sandbox changes, and couples tightly with the versioning for logic. Other times, the interpretation is more conceptual. Our ontology system applies the concept of abstraction layers to data modeling. People do their best work when they can use concepts that feel familiar. We help organizations model the best description of their world by defining the objects, properties, and relationships that they already reason in. Too often, for frontline employees and senior executives making decisions about hospitals, factories, or military units, data is a barrier, not an enabler. Our approachable semantic model for data lets everyone from the factory floor to the boardroom speak in a common language so they can wield data effectively against problems within their remit. Software engineers use code tests to raise the quality of their code. Our platforms provide frameworks for authoring and configuring data health checks to ensure data quality. Technical users view these health checks as tests, while less technical users simply view them as assurances. Our aim is to unite technical and non-technical users in a system that they can trust. Concepts that feel familiar to developers are reinterpreted in interfaces that frontline workers or senior decision makers can use too. In that light, versioning becomes a readable history of changes to institutional knowledge, and a means to resolve edits between disconnected installations. Similarly, branching becomes a sandbox for experimenting on analyses or in simulations. Delivery becomes an interface for publishing changes. This approach establishes trust in an institution's knowledge base, and by extension, our software, by helping everyone understand where data came from, how it evolved, and who modified it along the way. Just as version control systems let developers collaborate to build reliable code, our platforms let people collaborate to make trustworthy decisions. And we do all this while providing government-grade security so that our customers can manage any and every aspect of their knowledge base.
Organizations evolve, and legacy tech usually fails to keep up. Throwing another big data solution in the mix doesn't address that core problem. And over time, all these systems grow rigid and just disconnected from the business. We figured out that the real problem to solve is data integration. We learned that what our customers needed most was a platform to help them overcome literally decades of fragmented data systems, and one that pivots with the business. Institutions evolve organically, so a prescriptive model doesn't work. Our platforms embrace the inherent complexity of organizations. Customers can see the entire lineage, tracing provenance from an end user's view back to the source, and understand logic, data, and dependencies in between. With this visibility, they can manage complex data pipelines, as well as view health, schedules, permissions, and much more. All historical data investments can be plugged in, and transformations easily written to combine them with other data and power applications for end users. And the result is an open and flexible data operating system. To make the data operational for the business, we built a suite of applications so that basically any user in the organization can contribute to the data foundation. Data engineers and data scientists can write code in the programming language of their choice to build production pipelines, visualize results, and share templates to reuse logic. We also have non-code visual interfaces to do unstructured analysis or fully integrated spreadsheet workflows. No matter which interface is used to author, the data is written back to our platforms. This means that non-technical and large-scale technical integrations can both be used to power production pipelines. Underlying all these applications are granular security controls and a versioning system for data and logic.
So you have all the tools to build a data foundation, but how do we prevent it from becoming tomorrow's tech debt? One of the main burdens in enterprise application development is validating data freshness or making sure it's coming from the right sources, which, if broken, can cause end users to lose faith in the system. Application developers adopt our platforms because it lets them to deliver immediate results to users and removes the burden of systems integration. One framework that we have to maintain data correctness runs validations as the data moves through our platform. Not only can end users see the contracts set on the data that they're using, but data engineers are able to use the validations when updating production to know that the changes are successful before rolling them out to users. Our platform has a number of these frameworks, from change management, debugging across complex dependency lineage, propagating permissions, and orchestrating across changing data and code. The summation of these tools allows us to launch new applications in weeks instead of years. Additionally, security can't be an afterthought for enterprises' data layers. Customers historically try to address security by standing up more systems. This method makes their original data fragmentation problem even worse. Further, it leaves room for human error, creates security risk, and impedes oversight. The versioning and security that Mark mentioned enables institutions to become adaptive in their posture. Security is built into the data integration layer, which allows for data governance officers to review and manage data pipelines that involve security changes. When data engineers request a change in security, governance officers are able to not only review the code, but compare to the data itself between the two versions to make sure it's abiding by company policy before the change happens. The ability to iterate on security policy is enabled by our platform's branching and security models. By embedding security and sandboxing into the production system, deploying a security model isn't a separate thought. It has the flexibility to meet evolving security postures.
We're on a journey now where all this powerful data integration scaffolding really works, so we can increasingly focus on lowering the barrier to entry. Our latest work in software-defined data integrations narrows that gap between data ingest and delivering valuable workflows. Later today, you'll hear more about how our ERP connectors auto-generate pipelines. Under the hood, it's all built on top of the same fundamental data integration scaffolding. Everything you see today follows from having an infrastructure that embraces complexity and can adapt to an institution's changing needs.
Information security permeates our software and our software engineering culture. Both of these, from the start, are heavily influenced by our early work within the intelligence community. And the first question our customers would ask us back in 2005, by the way, if you're familiar with Goethe's Faust, this really is the Gretchenfrage for data systems. They would ask, how do you think about security and about auditing and about access controls? And it was clear from the start that without a solid answer to these questions, any sort of engagement in US or European intelligence communities would be a non-starter for us. And so we invested heavily in security infrastructure with two main goals in mind. First, this infrastructure is the foundation for performant and expressive access control across all of our applications and platforms. And second, it provides tools and guardrails for our developers that makes the development of security-aware applications easy and enjoyable. And I do want to emphasize the importance of the second point, because all too often security is actually an afterthought in software engineering, whereas for us, it's the foundation for both the architecture and the implementation of our software. And maybe the best example for this prioritization is Multipass, which is not coincidentally the first application we developed for Foundry. Anna?
All right, Multipass. Multipass is the central authentication and authorization component of Foundry and Gotham. It integrates with existing customer authentication systems like Azure AD, ADFS, or Okta to provide centralized identity and group management of all Palantir applications. The more interesting role of Multipass, though, is to provide granular and highly expressive access control logic as a service. So how does it work? Applications register resources, think datasets, data transformation code, analyses, or machine learning models with Multipass's resource graph and assign them access controls like view or edit. The graph allows applications to link resources representing their logical relationships and correlating their respective access controls. As an example, say a user runs a Spark job to derive a dataset from some input datasets. The graph records the provenance of this derivation, linking the output to the inputs, so that access to the derived dataset will be correlated with access to the inputs. In this case, for example, a user may only have view permissions on the derived dataset if she also has view permissions on all inputs to that transformation. We call this permission inference. The permissions that a user has on a given resource are inferred by the network of permissions on all related resources, possibly tying a user's access all the way back to her permissions in source systems. Permission inference works on datasets and on all other information assets managed by Multipass. This permission system is a dynamic and context-aware variant of policy-based access control. It is expressive enough to implement any of the complex classification systems of our government customers around the world. And then for product developers, Multipass provides authorization as a service, making it easy to implement secure applications and API. A developer just registers their data resources with the resource graph and can then rely on Multipass's permission inference engine to enforce those permissions across all applications. Through open APIs like OAuth and SAML, we also empower third-party developers to interface with Multipass and implement access controls for their own applications.
Cool. So let's look at 3 examples of complex permissioning workflows that Multipass enables. The first one is the distinction between discretionary controls and mandatory controls. Discretionary controls are typically granted through data sharing workflows. So for example, if Hannah takes a Foundry dataset and then derives a report from this dataset and shares the report with me, she will implicitly grant me view permissions on the report. So discretionary controls normally expand users' access. On the other hand, mandatory controls restrict users' access, generally by requiring membership to particular groups or access to classification levels like secret or top secret. And importantly, mandatory controls, just like Hannah explained, are propagated by Multipass through data derivations across the entire platform. And this means, going back to the example, that even though Hannah shared the report with me and thereby gave me discretionary view permissions on the report, Multipass may still deny me access if, for instance, the underlying dataset was marked with a secret classification and my account is not cleared for secret level data. The second example is fine-grained access control. And this means that we can use the same complex permissioning logic both for petabyte scale datasets as a whole or to subsets of data like sets of rows or columns. And for example, one of our Army customers uses Foundry to maintain a global dataset of their personnel. And it's clear that not all users should have the same global access to all of this data. So instead, Multipass enforces that officers can only see aggregated data about units in their line of command, or fine-grained personal health information just about their direct reports. And while this combination of global data governance and fine-grained access control may seem like a somewhat nice-to-have feature, we believe it's actually foundational to creating trusted and healthy data ecosystems. Because without this functionality, you would have to break up data sets and silo them in order to create permission boundaries. Instead, in our platforms, all users and all applications get the same up-to-date view to the underlying data. And this means that users and departments and organizations as a whole can collaborate naturally and seamlessly on their information assets and thereby compound their value over time. The third and final example is auditing. Multipass's central position in our security infrastructure means that it's a great tool for auditing workflows. Because all applications and all users have to negotiate access with Multipass, Multipass's API logs are actually a complete audit trail of all activity in the platform.
And with those 3 examples, we conclude our brief overview of our access control architecture. We're going to move on to a series of capability deep dives in Foundry and Gotham.
Something we learned over the years is that for the largest organizations in the world, the primary source of complexity is in the boundaries. The boundaries between the parts that they're made of, between teams, between data systems, between models. And when you need to react to a changing world, like a basic operational surprise or a global crisis, for each of those parts, their plans and set ways of doing things are now obsolete. And as a whole, you need to find a new equilibrium that works well for the new conditions. As one of our customers, you could be an energy producer with globally increasing demand, but also an existential need to protect the environment. Or managing a power grid in risky geographies prone to natural disasters. Or a pandemic starts and you need to produce food for the nation while protecting your workforce from the virus. You're producing PPE and medical supplies while countries shut borders and take out whole chunks of your supply chain overnight. You could be running a public healthcare system pushed to its limits, or one day, hopefully, producing and distributing the right vaccine while receiving daily updates on what works best and who needs it the most. With all these stories we've been a part of, there are some common themes of what leads to success, and we built those into a product we call Vertex. So first, you've got to be able to see the state of the entire value chain live across the silos and in a way you as a human can understand. It has to be clear which parts need your attention the most and what local actions are available to you and your people. But then you also have to be able to simulate what those local actions are going to cause across other functions in the value chain elsewhere. These simulations or virtual scenarios will be off by a lot at first, but you compare against the real world and capture more of the informal assumptions into your models. As your confidence increases, for every new surprise, you get to have a system that considers the various trade-offs between the parts to suggest not just the local, but the globally optimal reactions. Our customers tell me with Vertex and Foundry, their legacy tools, painful models, fractured ERP databases now work as one cohesive and flexible system, and how that can really make all the difference in what they do.
Our pandemic response started with HHS, CDC, FEMA, and the White House Task Force. After the first 48 hours from the start of our partnership with HHS, we scaled quickly to governors around the United States, countries around the world, and commercial partners across industries including healthcare, retail, food manufacturing, energy, agriculture, airlines, airplane manufacturing, car manufacturing, and many more. There was no more time for years-long do-it-yourself projects. There was no more time to waste struggling to extract data from ERP systems. There was no more time to cobble together Frankenstein technology solutions when lives are at stake, businesses are failing, and the world is experiencing unprecedented crisis. As we began work with these institutions, we were constantly leveraging the platform to develop new ways to help our partners based on their diverse set of challenges. These challenges ranged from demand forecast improvement across all sectors, which used Code Workbook plus Foundry Machine Learning to integrate the epidemiologists, data scientists, and analytics teams to operationalize their models into workflows. It involves supply chains across all sectors, production and distribution of a diverse set of goods like semiconductors or sausages, chicken, ventilators, PPE, shipping containers, hydrocarbon, and many more, which leveraged Vertex and an even newer application called Vortex. It involved parking of airplanes and reallocation of automotive assembly, leveraging Vertex and Workshop. Sales of medtech equipment and testing site location selection, which used Workshop plus Foundry Machine Learning for mobilization of global sales forces to develop new data sources and improve sales forecasts. It involved reopening of facilities and COVID exposure of U.S. Army bases, which leveraged Workshop to safely and sustainably categorize the risk exposure across global facilities. It involved contact tracing with robust data permissioning, leveraging Object Explorer plus Workshop, and maximize the use of available data, allowing for contact tracing events to be resolved 10 times faster and with increased accuracy, which minimized internal exposure and community exposure. And even computer vision integration for plant layout optimization, which used Foundry Machine Learning plus Object Explorer to ensure staff safety through COVID and post-COVID during normal operations. We found that Palantir and Foundry were uniquely suited to help our new and existing customers with changes throughout their core businesses due to the pandemic. Foundry allowed them to ask and action second and third order questions that historical software systems were unable to answer. For example, how are schools reopening going to affect my PPE distribution? Or what are the long-term impacts of the pandemic on my demand expectation for flights? Or even how will employee safety play a role in my new normal? And how can I be prepared moving forward? Palantir and Foundry's unique ability to adapt to each customer, sector, and challenge has made us indispensable in the fight against COVID and solidified our software as a necessity for how our partners conduct core operations.
So far, we've talked about two of our user-facing platforms, but there's actually a third, and this third platform runs behind the scenes. It's called Apollo, and it's the engine that powers both Foundry and Gotham. It's what provides our platforms with SaaS-style continuous delivery, and it's actually the foundation on which all of our software is based. And it runs anywhere that our software is deployed. Cloud, on-prem, classified networks. It's really transformed the way in which our software scales. It orchestrates updates across heterogeneous environments, and it provides us with autonomous management across our entire fleet. It's really been a step change in the efficiency of our own operations. Apollo is also able to perform this same automation regardless of environment constraints. And in fact, that's one of the main reasons we built it. Because since day one, we've worked in the most secure and highly regulated industries, operated in the world's most logistically challenging environments, and we built software suitable for our customers' most sensitive data. And it's this sequencing that's important. The fact that we had to tackle the most technically challenging environments first, that is what ultimately led us from the very beginning to invest so heavily in building a flexible yet powerful platform like Apollo. And since then, Apollo has allowed us to extend our software platforms across the whole public cloud, across regions in order to meet data residency requirements, and even across cloud providers, enabling us to run a truly multi-cloud SaaS. And Apollo's enabled us to take that same SaaS and extend it on-premises to connected hardware appliances and edge devices. And we've been able to do this without adding significant overhead or requiring specialized workflows. Our software developers write code and Apollo deploys it. And our centralized operations teams can monitor the whole fleet from a single pane of glass. In other words, Apollo has enabled Palantir to bring SaaS economics to environments where no SaaS has gone before. This technology has allowed Palantir to achieve something that is truly unique. Not only can we fully embrace modern software development practices like continuous delivery, infrastructure as code, containerization, DevOps, the core components of a high-margin SaaS company, but we can embrace them without any of the usual downsides or trade-offs. Because we can run our software in a homogeneous way across heterogeneous environments, we can bring SaaS economics to even the most unlikely places. We can deploy our software anywhere. We can do it efficiently, and we can do it at scale. And it's this that gives us unparalleled flexibility and what makes our addressable software market virtually unconstrained.
So you've heard a lot about what we've already built, but now Jess and I want to tell y'all how we actually decide what to build next and what that product iteration and product roadmap development looks like. One of the most unique things about Palantir is that our products evolve through our work in the field. We send our software engineers to war zones in the Middle East, to offshore oil rigs, even onto submarines. And as we do this, we see how data is actually being used and relied on in the real world. And we identify patterns of data problems that our customers face. In particular, we are earning differentiated insights, deeper truths that most people don't believe to be true. Based on these unique earned insights, we are able to identify high-value product improvements, build them in a scalable, flexible, and industry-agnostic form, and extend our core platforms. Not only does this provide us with sustainable product differentiation, but it enables unprecedented iteration speed and feedback cycles. We are able to hypothesize, productize, and ship to the fleet faster.
So how does this play out in practice? In the case of a large energy customer, our software engineers embedded with their technical staff to understand the challenges they faced when trying to analyze real-time data from hundreds of thousands of sensors. With a deep understanding of the problem space, we built a prototype to rapidly access, aggregate, and decompose time series data at massive scale, building on the knowledge we had developed tackling similar problems in other industries. By productizing a prototype and baking it into our core platform, we quickly scaled this capability across our customer base. This product solved for the initial patterns we had gained insight on, but when we do our job right, the product investments we make should scale, not only to known challenges, but also to unknown use cases across many industries. Today, our time series product powers a wide array of workflows spanning across manufacturing, aviation, finance, and more. As another example, in the case of the airline industry, we deployed our platform to drive intelligence in aircraft routing and scheduling, where data is needed instantaneously to inform real-time decisions about where to send aircrafts, decisions that each have a long tail of downstream implications across the airline network. This yielded differentiated insight on highly operational what-if scenario analysis, which led us to develop the Decision Suite, a comprehensive set of products within the platform that allow customers to deploy operational decision-making applications in a no-code way, in a fraction of the time it takes to build custom applications. By the time it had matured from beta to production release earlier this year, it was already deployed at over 50 customers, powering applications in federal PPE allocation, automotive parts recall, medical device Salesforce enablement, and more.
And I'd be remiss if I didn't touch on some of our work for the US government. We have seen over the last 15 years that the types of data and operational decision-making challenges faced in the government and commercial sectors are increasingly similar. The leverage we have gained across both sectors from core product investments is enormous. For example, our experience working in classified environments led us to make investments in the security primitives that Hannah Corris and Rob Fink described earlier. In turn, these technologies have helped our customers in pharma, finance, and other highly regulated industries respond to and comply with complex and constantly evolving regulations.
This forward deployed model is a huge part of who we are as Palantirians and is integral to our product strategy and our sustainable, continuous product differentiation. By having engineers deeply embedded in industries across public and private sectors, armed with the platform primitives they need to rapidly develop, we ensure that we're building and deploying solutions that push our product into new user bases and use cases across our fleet.
Gotham is our first and oldest product. The evolution of Gotham is really the story of Palantir's evolving and expanding relationship with the Department of Defense. We got started in the intelligence community over a decade ago. Our unique differentiator at the time was that we had the only software that could help our customers make sense of the many disparate types of intelligence data at their disposal. We're talking unstructured documents, satellite images, video footage, audio recordings, to name a few examples.
There were always purpose-built systems that could work with one of these types of data, but this specialization resulted in users jumping from system to system, exacerbating an already siloed decision-making process. More importantly, this created a source of real operational risk. Software systems gaps created intelligence gaps, which then caused users to miss critical connections between these systems. Some sorters still spend an entire 12-hour shift coalescing data into a single PowerPoint, leaving virtually no time for analysis. With Gotham, we wanted to build a product that shifted this ratio, less time searching for data and more time making decisions with it. We built Gotham to meet users where they are. By translating Baroque data formats into an intuitive, domain-specific ontology, we cut out the time and mental energy required to actually make sense of the information at hand.
It's been a crazy ride, and the ethos of meeting users where they are has, in fact, led us to some interesting places. As our user base has grown, from analysts in air-conditioned rooms in Northern Virginia to Special Forces operators stationed in every theater across the globe, Peter and I both have had the privilege of embedding with users deployed in the Middle East. We've spent time collecting feedback in the offices of commanding generals, as well as the tents of forward deployed operational units.
But the story of Gotham isn't just a story of growth. It's also a story of adaptability. Building a product for the DoD means signing up to deal with constantly changing adversaries, and it requires designing a system that's both flexible enough to address the threats of today and the unknown challenges of tomorrow. And the world is changing fast. Gotham was born in a world defined by counterterrorism, but is coming to age in a world that's being threatened by near-peer adversaries. We started with a focus on unstructured cables and human reporting, but as the battlefield has become more dynamic, high-scale sensor data is increasingly the most critical data source in the DoD. And while we started in the J2, the Intel Directorate, Gotham is now pervasive across every single function in the military, with soldiers, sailors, and airmen across intelligence, operations, and logistics relying on Gotham to perform their missions.
So, what's next for Gotham? We're building AI-enabled Mission Command, a cross-functional platform that uniquely connects data scientists and battlefield decision makers. Together, they can collaboratively author software-defined logic to transform high-scale sensor data into actionable insights and auto-generated courses of action. This reduces the sensor-to-shooter cycle and allows commanders to make better decisions faster than ever before. Second, we're expanding the domains in which Gotham is deployed, from space to mud. We're moving beyond the cloud and onto the edge, from laptops and mobile devices onto new cutting-edge form factors. We're developing sophisticated hardware and software interfaces for shortening the loop from an ever-expanding set of sensors to an increasingly heterogeneous set of shooters. And finally, we're working with visionary leaders across the DoD to prepare the product to support entirely new kinds of warfare. Information warfare, cyber warfare, economic warfare, conflicts that will be fought in a completely virtual battle space.
Our platforms will never be finished, but we will continue to perfect them. Gotham has been our obsession for decades, and we're so proud and excited to have the opportunity to share its story with you today. To tell the Foundry side of the story, we'd like to introduce Bianca, who will tell you more about what's coming next for the Foundry platform.
What drives our roadmap is a vision to enact lasting transformation for our customers. Between 2013 and 2016, I spent a lot of my time sitting with users, watching them do their job, and asking a ton of questions, trying to understand the screens they were looking at, the calls they were making, and the buttons they were clicking, and why. These users weren't data scientists or even IT specialists. They were the people at the very front lines of operations and strategy for their business, making the critical day-to-day decisions. For 2 years, I lived and breathed aerospace, working with quality control on the shop floor, maintenance engineers at airlines around the world, and dozens of other functions. My job was to bridge the gap between the data we integrated from their systems and the day-to-day operational workflows that actually improved and changed the company's outcomes. These early operational tools had thousands of daily users, allowed different functions to collaborate in unprecedented ways, and generated significant business value. 4 years ago, we invested in scaling this early work further in Foundry. Today, what used to take several developer months is accomplished in a few days with no code and used across our customers in commercial and government. Our ultimate vision is for Foundry to be the operating system of a connected company, the platform where critical decisions and processes take place on a shared foundation of data, models, and operational workflows. We still have a lot to do to fully realize that vision, and I'm going to highlight a few of the most important upcoming investments. An area of work I'm really excited about is integrating models as the first-class component of our shared ontology layer, a true dynamic digital twin. You heard earlier about how the Foundry ontology maps data to the real-life entities in a business, your raw materials, your processing plants, distribution centers, customer orders, etc. We are expanding on that definition to include models that describe not just the pieces in the organization, but how the different pieces actually impact each other. For example, how would an unexpected drop in the volume of a raw material at the very beginning of the supply chain impact the ability for processing plants to manufacture a finished product, and subsequently impact customer orders? Typically, the many models used to answer these questions live all over an organization, in Excel spreadsheets, local code, or even in the heads of the experts. In the best case, it might take days to ask a really simple question like this, and more likely, it will take weeks or months. And this makes reacting to unplanned changes often impossible. We want to take these siloed pieces of logic and turn them into a continuous and shared model fabric, very much like our shared data fabric. Then the idea is that any combination of these models can be leveraged live in the operational platform for users to really rapidly generate and compare different scenarios. Essentially, simulation as a service. Let's take an example. A sales agent and a demand planner share a common goal of maximizing revenue, but they have very different workflows. The sales agent has to prioritize customer outreach based on inventory, and the demand planner has to ensure upstream production is on track to meet projected sales. On an individual basis, the model fabric would allow each user to use the same logic to forecast revenue, reducing inconsistent assumptions or duplicate work, but within their unique workflow. Even more powerful is how the model fabric would enable cross-function collaboration, especially in these sort of difficult situations where there are unplanned changes. For example, if there is excess inventory of a particular product, the sales agent can be alerted to this as a potential opportunity for additional sales and quickly iterate with the demand planner on a price set to maximize revenue and evaluate how it might impact other products in the portfolio. This kind of chain decision analysis that allows for a quick response to change that is impossible today when models are fractured across the organization. Equally important, we think that models are a lot like data. In addition to being siloed and disconnected across an organization, they come in many different shapes, sizes, and qualities. Foundry will have to be able to integrate with any model, whether it's built inside or outside of the platform, and provide powerful tooling to continuously monitor model performance. This learning aspect is really key. Models have to evolve over time as the available data changes and as the system changes. Static logic creates businesses that operate on autopilot, and we are aiming to productize continuous improvement and rapid adaptation to change. Another key priority on our roadmap is decreasing the time to value. We see a lot of common challenges across our customers: supply chain disruptions, production ramp-up, manufacturing quality, and more. We are building a product that allows us to encode these common patterns into a shared catalog of end-to-end workflows available in Foundry. This includes everything from common data connectors, starter ontologies, business logic and models, to operational applications, bundled together in thematic use cases that can be deployed end-to-end in a matter of hours. We started building this in January, and in April, it already drastically lowered the cost of supporting our COVID-19 response work by allowing us to deploy workflows in one click via an in-platform catalog. We are moving towards a future where any set of building blocks in Foundry can trivially be packaged together so users can use it to solve real problems from day one. This will radically decrease the time to value for our customers and enable both them and us to focus on innovating and customizing the platform to their needs instead of reinventing the wheel. I've talked a lot about how to optimize Foundry at a single organization, but most of our customers are deeply intertwined with other organizations. With recent world events, we saw an unprecedented need and willingness to work together. Our investments in secure collaboration enabled organizations to do that in an unprecedented way at a time of crisis. And our belief is that going forward, this will become business as usual, and we will invest in Foundry not only to support individual connected companies, but entire connected ecosystems.
Today, I'd like to give you some background into our defense business and where we're at today. As you may know, we started our defense business in 2008 with a singular focus on helping commanders win our nation's wars and helping keep our soldiers safe. We did this by delivering an operating system that tied together data from thousands of sensors and systems so that operators and leaders at every level could make fast and informed decisions. This wasn't an easy problem to solve, as you can imagine. Commanders had too much information. The information was siloed into different locations and systems, and information was stored at different classification levels on different networks. The technical challenge was enormous. We had to develop an operating system that met the military where they were. They had a worldwide footprint. They had thousands of sensors, mixing both brand new sensors with 40-year-old systems. Our platform had to be able to work on mobile devices, in the cloud, as well as with traditional on-premises hardware. We had to make an enterprise operating system agile to go where the defense customer wanted to go. It wasn't easy, but we did it. Our platforms worked, and the military demanded it. But then we had another challenge. How do you break into the notoriously difficult market that's dominated by the government trying to build what we had created? I'd like to show you a slide, this journey of breaking in. As you look at this history slide of our work with the Army, it doesn't tell a technology story or a product story. It tells a story of us figuring out how to compete. And when we finally figured that out, we started to win. From my own personal story as a human being, I had just finished 6 tours in the war as an Army Ranger, and solving the technical challenges to help commanders make more informed decisions was a critical problem to solve. It impacted soldier safety and our nation's freedom. Even in the beginning, Palantir had the right product to help in these challenges, but we simply didn't have the opportunity to compete. Over half of the Army's commanders had requested Palantir, but we didn't have the opportunity to compete for any enterprise deals and turn that demand into real revenue. The government was trying to build its own system and failing. If you look at a few of these examples, whether it's 2009 with 5.2 Stryker, or 2012 with the 82nd Airborne, or 2015 with Army Special Forces fighting ISIS, these units were fighting in dangerous battles. Lives were on the line. At the time, soldiers knew that our software worked, and the commanders demanded Palantir. But it wasn't until 2016 that our business really changed. So what happened? In 2016, the courts ordered the executive branch to enforce a commercial item preference rule, which states that an agency must first conduct market research to determine if a commercial item exists before it tries to build something from scratch. This changed our business forever because it meant that every company and agency had to compete with a real working product side by side, not just a future promise. And as you can see from this chart, as soon as we were able to start competing for enterprise deals, we began to win. So where are we today? This is an incredibly exciting time for Palantir. We're employing both of our platforms across a variety of the hardest problems our defense forces have. We work on maintenance, logistics, training forecasting, finance, medical and patient care, human resources for million-person organizations. We run artificial intelligence ecosystems for a variety of the hardest problems in the field. One of our most exciting growth areas is the customer's realization that you have to have integrated data ecosystems with lineage and pedigree before any AI or machine learning project can successfully begin. And we do this out of the box. In many ways, our defense business is just beginning, and our product offering has never been stronger.
So what makes the DoD such a compelling partner for Palantir? From a purely technical perspective, the DoD's data landscape is incredibly complex. Tens of thousands of databases living across enclaves and networks of every data structure and type with ever-evolving security, auditability, and classification requirements. You can imagine bringing that data together to answer even basic questions about the DoD's resources or mission capability would be a Herculean task, something only a flexible and time-tested software solution could support. In this way, it's the perfect place for Palantir to compete. From a mission perspective, working with the DoD gives our engineers the opportunity to collaborate with and empower our nation's best and bravest to make data-driven decisions that save lives and enable our partners to complete their missions. A pursuit perfectly aligned with the very reason the company was founded. To that end, Palantir's data management and integration suite provide the DoD with a wide range of critical benefits, including granular role-based and classification-based access controls, robust security controls, data provenance and auditability tooling, tools to identify gaps in data coverage and critical data quality issues, improving data correctness more rapidly than ever before, and enabling the DoD to take control of their data story. Extensible and flexible data ingest tooling to enable a continuous real-time perspective into the pulse of the military's resources. Visualization and analytical tooling to understand the current and predicted future states of the DoD. A standardized way of viewing and managing current and legacy structured and unstructured data. The ability to sunset existing systems and recoup investments in technology projects and initiatives. So what problems do we end up actually solving? First and foremost, the platform supports the DoD's most critical readiness workflows. Being prepared to execute any mission at any time requires a complete understanding of the DoD's resources and its targeted battle space. Palantir empowers its DoD partners to assess its current resources, predict future states, run simulations and forecast models, and securely facilitate rapid decision-making at the strategic, operational, and tactical levels. For example, when the COVID crisis hit, Palantir was able to support the DoD's most critical response efforts within hours of the call. Over the last several months, Palantir has enabled our partners to integrate data from dozens of disparate sources in order to analyze PPE, ventilator stock, test kit statuses, test results, and recovery data, providing the tools required to understand the impact to the DoD's assets, missions, and the critical locations that are a part of the DoD's overall response to the pandemic. Outside of these most exigent needs, Palantir enables the DoD to operate optimally across every domain and business area. For example, Palantir provides the DoD with full transparency into agency spend and funding allocation, enabling our customers to identify opportunities to reallocate or reinvest funding and audit their entire financial ecosystem. Palantir also supports the digital transformation of the DoD's operational logistics, enabling the maintenance and supply activities of entire services and the ability to rapidly deploy warfighter capabilities from the shore to the tactical edge. Palantir empowers the DoD to perform future predictive readiness analysis, targeting the sustainment of critical classes of supply to include fuel and ordnance crucial to fighting and winning our nation's wars. Palantir integrates ground, terrestrial, cyber, and other data to enable operators and third-party applications to leverage a shared understanding of the blue, red, and gray space picture. Leveraging the integrated data platform, DoD can now track mission readiness and our nation's most critical assets in near real time.
Carlos Stewart, and I'm a petroleum engineer for BP. I have 15 years of experience with the company, and I'm also the system modeling and optimization analytics advisor. So just to give you a little background with my experience with Palantir, I started working with Palantir in 2017, whenever they came over to the Gulf of Mexico region that I was working in at the time. I was a senior petroleum engineer for one of the product production platforms in the Gulf of Mexico region. We're working on the development of the subsea and wells digital twin, a system to replace a system that we already had, but to try to enhance it and make it better. I was really excited to see the development capability that Palantir was able to provide. It really brought forward the ability for us, the end users, to be able to control the pace of development, the pace of implementation, and the items that we wanted to add. Previously, with the prior system that we had to work with other vendors or other people within the company in order to get things executed. This was a way to really expedite that. In addition to that, we were able to spin up a new digital twin for it was a water injection system. We were looking to provide some level of performance trends that the model would be able to provide for us. And so we're able to actually develop the underlying physics model, develop the configuration of it as well, and actually get the tag streaming live in less than 24 hours. Previously, a task like this would have taken anywhere from 2 to 3 months. And so that was another thing that was really focusing in on, wow, this is a lot of power that we now have available to the end users to really go from concept to getting the value out of it and putting into the hands of the users the ability to create and develop. For me, those were two kind of big themes that were arising at that point in time. Fast forward to today, we're now in a position to truly take advantage and accelerate the value generation process. Amongst my colleagues, there have been a tremendous uptick in performing analysis via time series applications like Quiver, along with integrating third-party time series data, integrating static data, whether that's from inside the company or outside the company from other places, dynamic data that can change from other users or data sets, and even simulation data, which is data from the digital twin platforms. So with this, we're looking at millions of data points. I mean, a whole bunch of data points. We're processing that. That really lends itself to all the different types of users that we have, people that are visual and need to see things happening, and gives you fast confirmation as to whether or not you are accomplishing the initial task that you're after. Doing so was not available prior to the Founder system. Right now, we have the ability to work with not only just millions of data points, but any analytics that we want to run on a data set itself. We can do those analytics over millions of rows in a matter of minutes. The processing power and capability from a standpoint of the sheer number of data points, along with the speed in which we're able to process that information, it's a step change from where we were before. The other big thing that we're able to do right now is the ability to rapidly share any work that's been done, so that way we can continue on from what somebody else has already done if it suits your needs instead of trying to recreate something. And that helps to drive efficiency. In addition to that, the ability to share also allows for multidisciplinary teams to troubleshoot something off of the same information or any group-based analysis that can be done. The sharing is as easy as copy-paste of the URL of whatever you're looking at, or pressing the share button and selecting whom you want to share that with. A lot of this we're able to do now because we're on a common platform and a common system. And again, this allows for any analysis that's done in one location to be leveraged pretty easily to another asset or region with the click of a button. In addition to that, we're also able to leverage the work that's been done in the ontology space. So the definition of some of our equipment or our wells, we're able to create some level of analysis and easily pivot off of that to any other piece of equipment or a well that we want to do that same analysis on. That really does consolidate at least the amount of effort associated with generating an analysis, but then expands that effort with regards to its application and capability to gather different levels of insight. We were able to couple up the speed of value realization from idea inception, and also the power of users to be able to create and develop. So that way they can participate in that process. And that's what really generates a lot of excitement from an end user perspective. And therefore, the capacity of what the practitioners are able to do with the data in such a short period of time has just been phenomenal. So at the same point in time, the Palantir applications and data foundations have grown. Some of the areas that I'm involved in are around efficiency improvements, capacity growth, and protection of that capacity, and in production system optimization. So applications like Vertex, which you may have heard, coupled with other digital twin simulators within the Palantir ecosystem, have underpinned the identification and execution of over 10,000 barrels of oil equivalent a day of production optimization opportunities and production protection opportunities as well on an annualized basis. These applications, with their ability to calculate and ingest real-time data integrated with an underlying physics model, and then have the ability to export out model-based time series data that can enable the ability to detect anomalies within your system. Both of those things combined with process data coming from your pressure sensors or your rate tags, et cetera, provide you with another level of insight on what your system capability is, things that you would not be able to train or be able to have a sensor on to inform decisions. And that's what this is all about. Just one example that we have from a performance monitoring perspective, the water injection system that I mentioned before. With the underlying physics model that we had put in place that we were able to spin up in less than 24 hours, we were able to take into account in real time our estimations of rates going into those wells and compare what our expected pressure performances should be to what we're actually measuring within the field. With that information, we were able to extract out any information that can lend itself to what performance the wells were experiencing with regards to injectivity index or what their reservoir pressure transients were doing at that point in time. And with that approach, but we've also looked at how can we engage varying levels of practitioners or engineers, et cetera, that will use these models such that anybody from an entry level can have the comfort to go in and look at what if scenarios or understand the cause and effect relationships of doing something within the system. And that really casts a much wider net of who can actually add or generate value to the company. And that's reflected its way into the value that we've seen from those digital twins that I was explaining before. So again, due to this data being in the same foundational platform, so Foundry, the ability to integrate this data with process information, with static information or other information from other sources, really improves our ability to truly understand our system and what are the ways in which we can improve that system, what are the ways in which we can optimize that system and really extract the best out of it. In short, Palantir has provided a next level capability with the tools and the systems that we are currently operating on. Once the data is free, you as a company can take, take that information as far as you want it to go. And really your limit is only up to your imagination. You can go as far as you wish to go in that space. And I know that we're not done definitely on this side from a VP perspective.
Hi, I'm Alexandra Wolf-Schiff. I wanted to welcome Alex Karp, CEO, and thank everybody for watching.
Well, thank you, everyone who's attending, for coming to our Investor Day.
I wanted to ask a bit about how much the company's really transformed in the last couple of years in terms of its economics, and you've had a huge explosion of growth in revenue just in the last year. How did that happen?
I think one of the interesting things about being a private company is as we've gone through this listing process, people got to see our GAAP numbers. And of course, what jumped out at a lot of people was that, we grew 49% at the beginning of the year, that our software margins are super solid, and that we grew this 49% off of a pretty large base. And, more people spend more time looking at other companies, will note that there are very, very, very few companies, if any, that are similar to Palantir in any way that are growing 49% off of a large base with the margins we have, both gross margins and contribution margins. And then the question becomes, well, how does a company which has been in existence for 17 years and has this significant gap scale surge forward? And that's, in order to understand it, you have to understand that our business model is actually very different than what you'll find in other software companies. Palantir builds products approximately 5 years before the world knows that it needs these products. If you look at our two core products, PG and Foundry, they were both conceived. PG was conceived when people thought that integrating data according to norms and the scale and intricate issues involved in data in the government context, especially in the anti-terror context, was a worthless way to look at data, especially the idea that data protection, civil liberties would be a necessary part of working with data. This was at least 5 years, if not 10 years, ahead of its time. And then Foundry, which was conceived of roughly 4.5 years ago, 5 years ago, and really came into fruition. We put all of our customers, commercial customers, in Foundry in 2017, but it was the need to supply a complete stack of software to an enterprise was built on the bias that we believed that crisis in the Western world would be so extreme that the Frankenstein monster way of servicing an enterprise with 50 different products that have to be sewn together by a myriad of engineers, none of whom in particular are coordinated, but on the back of PowerPoints that take years to develop, if not, and a cost structure that can go into the hundreds of millions, would not work in a time of macro, either economic or political crisis. Of course, we didn't know that COVID would come, but we were betting that there would be economic and political conditions that meant the old way of building the Frankenstein monster internally, or purchasing 50 products that are supposed to be sewn together according to a PowerPoint generated by a non-technical consultant, would not be efficacious when your business would either live or die based on whether you can rebuild your enterprise stack overnight, and in our case, within hours. And so the supposition of Foundry was individual trinkets may be appealing to people building their business based on some report written on past norms and needs, but would not be able to service the needs of a growing, of a market shift of galactic nature. And we put enormous resources against building this. And there was internal disagreement. We're a company that embraces disagreement. But even as of a couple years ago, there was enormous discussion about whether a product that would be ideally suited for a world where everything has to change overnight, as COVID and other future macro and political crisis would generate, would be something when you could just build something much similar that amounts to a little widget that's well understood by everyone because already there's 50,000 reports written about it and every company has it. That was a subject of enormous debate. And had we been wrong about the way the world was going, people would be questioning whether we're sane or not, or further questioning my lunacy. But the lurching forward of Palantir on revenue, gross margins, contribution margins, is because we built a product 5 years before it was needed, just like we did with PG and just like we'll do in the future. And this is why a small motley crew of a couple thousand people scattered around the globe can generate 49% growth in the first half of this year off of a massive scale. And the magic of Palantir is not what people typically talk about, which is our ability to steadfastly, defend the men and women that defend us, or the fact that we are crucial to some of the largest industry in the world. The magic of Palantir is we build products 5 years before anyone believes they're needed and deliver them at the moment when they are needed. And that's the story of PG, and that's the story of Foundry.
Well, I think also people have similar questions about other Silicon Valley companies. What happens to their data? So how does Palantir differentiate itself in that regard? How does Palantir protect people's data, whereas these other big tech companies
the main
don't?
difference is that we do not mine, purchase, resell, or in any way monetize data. One thing that is not well understood about Palantir is that well over 50% of our revenue historically has come from international contracts, and that is because the more you codify how the data is used, the more valuable our product is. And it's valuable because in a context where there's radical transparency and enforcement about the use and application of data, it's quite frankly very hard to find another product that can do what we do. And so the interesting thing about the civil liberties discussion in our business is the decision to, in the beginning with PG, to both not to solve the problem of reducing terrorism and increasing civil liberties as opposed to sacrificing one to the other was completely an ideological bias driven by the core founding team, and I'm quite proud of that and my role in that. But like many good moral decisions, it's also led to tremendous financial success because the rigor and granularity with which we can use data, make it transparent to a third party, makes it so that we have an enormous structural advantage the more data is regulated for what I would view as legitimate reasons, like who sees it, how long do they see it, under what conditions can they keep it, is the data purged. These are also, there's been a burgeoning rigor around the codification of the use of data, which I as a co-founder and CEO have supported, and as a citizen, and it's just very advantageous for Palantir because we've been thinking and codifying these things in our code since inception. And people just now are beginning to understand the actual necessity to do this, but it's actually nearly impossible to rebuild this into a platform that was not designed to do this, whereas Palantir was designed ex ante to deal with a world in which data was not only had to be available, but had to be rigorously tracked and under very particular circumstances integrated so it could conform with local laws and norms.
COVID-19 is not the first crisis you've dealt with. I mean, you dealt with the aftermath of 9/11, the rise of ISIS. There's so many different events that have happened that Palantir's products have dealt with. And how did you manage to see these things 5 years ahead of time?
We have some structural advantages so that when we interact with clients, we actually understand the technical problems they're trying to solve. We are organized in a way that pushes responsibility to the edges. And we have, in all modesty, among, if not the strongest and most interesting people in the world working at Palantir diligently day and night. But in the end, Palantir is a master of creativity, but we harness this in an exceedingly creative way. And we make bets. Of the 3 big products we've built, 2 were built years before anyone understood it. And there's just a mystical question in philosophy and literature and any métier you look at. How does a philosopher or a writer write something that is actually do something years before anyone understands its value? And you see this, I don't want to bore investors with a philosophical exegesis, but you see this in the great writers, both philosophical, sociological, and in literature, that they capture something that then people understand years later. De facto, what Palantir is doing is the same thing, but in tech. And it has to be organized, so there's an execution element. And the tech has to be by far the best in the world. So you need the best people in the world to do that.
Speaking of people having different kinds of backgrounds, you personally have a degree in philosophy, and I wondered, does that inform your leadership at Palantir? And if so, how?
Palantir has thousands of employees and the factorial of that of opinions. So there's a management aspect, which is that when you're managing people of Palantirians, of talent that we have at Palantir, you have to understand that you will have to convince the person. No Palantirian is going to follow some crazy order that makes no sense. Maybe a couple times a year. But if you have a degree of academic training, you often understand the person talking to you is telling you something that you have to verify yourself. And then there's a proclivity. When you're working in technical, political philosophy, social theory area, you're working on very, very small distinctions that have enormous impact. And you're emotionally tethered to those. And that's the way a technical person works. And you have to be able to work and convince those people to build a product that may be different than the way they would conceive of building the product. And that requires convincing, not order. And I think often people with a more classical business training believe that they get to decide. And then last not least, the interesting thing about these philosophical movements is the ones that were prescient. What is it about somebody or a group of people that saw things that were then seen 100 years later or 20 years later, or in our tech, which would be equivalent 5 years later? And so being focused on what is an idea that will be valuable later is, I think, a particularly useful way to understand academic work. And bringing that into the Palantir culture is something that I'm proud to have played a role in.
You mentioned in the S1 that Palantir will not work with certain totalitarian regimes. And was that a philosophical decision, a moral decision, all of the above? And do you worry that you have competitors that will work with these regimes that Palantir won't? And will that be an advantage?
We have investors that stuck with us through thick and thin over many years. And one of the things that I think it's important to tell future investors is that we have a certain set of beliefs, and we are going to stick with these beliefs. And just like in the past, these beliefs cost us revenue. There will be decisions in the future that cost us revenue. And there will always be somebody who does something that we're not willing to do. And that's just the nature. If you're coming to Palantir as an investor, you need to know that we are going to fight for our culture internally. We are going to stick to certain norms that we've elucidated in the S1. And that if you as an investor would prefer a company that is more open to changing the basic nature of its culture and the norms that it believes in to make extra revenue, you really should pick another company. And the reason why we have, in my view, some of the best investors in the world, especially the Palantirians, we were upfront from the beginning about what we were going to do and what we weren't going to do. And we also delivered. I don't view these things, by the way, as a contradiction. You know, typically people will say, well, if you don't take every dollar off the table and work with some crazy environment that's doing highly unethical things that are not in accordance with the local law and cannot be justified by any standard, that you are you're being unfair to the investors. But I think if you tell the investors and you tell the people that are at the company from the beginning that there are certain standards we follow independent of revenue opportunities, you get better investors, you get better employees. You should not invest in Palantir if you think we are going to change our internal culture drastically, if you think we are going to work with regimes that are not allied with the U.S. and are abusing human rights, if you think that the future is going to be a super rosy place where the past ways of supplying software are going to work because enterprises and governments do not need to be reformed, you should not invest in Palantir. If you think we are going to reduce the complexity of these issues to some weird soundbite that makes sense to somebody in marketing hired by a consultancy, you should not invest in Palantir. If you think that we will doggedly build the best software in the world years before anyone else, and that we will supply the software at the world's perfect macro timing, we want your support because that's what we've done in the past and that's what we're going to do in the future.
How does artificial intelligence figure into Palantir's future? I know that you've always used a human-driven approach to technology, and I just wonder, is that something that you'll be using more of or less of, and how will that work?
Well, Foundry, it replaces the whole technical stack, and a lot of our clients use it in a human-driven way. Some of our clients are using it on the supply line. Some of our clients are using it to optimize drilling in oil and gas. And some of our clients are using it to run AI against the normalized data. And these things are very effective in all contexts. And I think what you're going to see in the future is that the Palantir stack is used aggressively in some contexts with AI-driven models, aggressively on the assembly line, and aggressively by technical, either technical in their area of expertise or technical in the sense that they can write code on top of the Palantir platform. And those are all use cases. As a company, we're very, very agnostic, and we celebrate the migration in many companies to AI because the AI products don't work unless you have something like Foundry to normalize the data. And they don't work ethically unless you can somehow impose the norms onto the data so that the AI doesn't run amok. So in general, these movements, the AI and political and economic conditions are enormously beneficial in the sense that they expose what part of your tech stack actually works and what part is actually a PowerPoint.
Alex, thank you so much for all of your time, and thank you all for watching.